Hey guys, it's the holiday season. The best time of the year. Would you like some presents?
Good morning, good afternoon, or good evening. I'm really good at forecasting the market. But I'm not that good about telling what time you're watching the video. So I'll obviously give you the three options there because you're going to be watching it during one of them. And anyway, I want to greet all of you and hope that you all enjoyed your plethora of eating on Thursday for your Thanksgiving. Me, like I said, being out of town, I enjoyed my third consecutive meal of pad thai, tom yum goong, som tam, the standard Thai dishes, and absolutely excellent. I hope all of you enjoyed it. And at the end of the clip, I'll hope that none of you were having the same discussion that I'll share at the end of the video there. But recapping, I promised you a November to remember. And both of you, whether you use you stand when you pee or you sit when you pee, both of you got to play all month. It was absolutely perfect. This week, or I'm sorry, not this week, this month, coming up next week, we have the FOMC meeting, December 10th. Yes, I'm always trying to find the gem of gems that can be traded. And I do not think that this will ever be replicated, what we had last December, where an hour before the FOMC meeting, like we always do, plotting out where we can get pre-positioned prior to the announcement. The 6,000 puts were 75 cents, $75 per contract. They ended the trading session at 124.90. That's $12,490 per contract. That's a $12,415 gain per contract. And this FOMC meeting has everybody on the edge of their seat. So again, if you've not looked over the 884 strategy video that I shared a few months ago, I strongly suggest that you do, because like I shared there in your post over here in the spread room, not in the spread room, in the alert room, as we went into the end of the Thanksgiving period, we're always quick to say, I'd die for my family. So when you feast tomorrow, that being Thanksgiving, look at them and ask yourself, are you willing to exercise for them? Are you willing to eat healthy for them? Would you quit your bad habits for them? Would you sleep early and wake up early for them? Because you can't add days to your life, but you can add life to your days. Trust me, I'm speaking from experience. I love no internet. I love no cell phone. And that's because I've created the life that I want. And I want all of you to have the opportunity to make a decision to be able to create the life that you want before you're not able to make any decisions anymore due to what's coming in the next 12, 18, 24 months. So let's get a quick recap going back to prior to leaving, November 21, OPEX Friday. Because we had that massive sell down over there the prior day, where we went up 1% and then ended the day down greater than minus 1%, which, as I shared and went through every bit of a target that I could, how does it go plus 1% to end the day greater than minus 1%, minus 1.56%? The simple was the Bitcoin margin calls, which now that a lot of people have had time to absorb and understand why, it similar to what we had last year in August, was the yen carry forward trade. Borrow money from the yen, invest it into whatever Bitcoin, and when you had your Bitcoin break down below minus 20% from the all-time high, you got margin calls, and then when you broke down below that 400-day moving average, you got more margin calls. And again, sharing, how previous 32 trades have gone over the past couple of weeks. We come down to here. Part of yesterday's demise was that there is no Fed cut coming in December. That was all the chatter a week ago. And like I shared, on April 8th, understanding April 7th was our bottom, we're extremely oversold. We dropped down, boom, we hit our bottom. The next day, we were up 10%, April 9th. Now, this isn't April 9th, right? We know that. It's not April 9th. And what you got was your bounce over the course of the week. You got a 5% bounce. So they didn't give it to you in one shot. They gave it to you over the course of a few days in a perfect week to be able to give it to everybody because it's Thanksgiving. And what you got here was you got 5 green closes in a row. Last week Friday, going into this prior Friday. Thanksgiving Friday. So what you see here is after that big minus 100, minus 200 from the open, over there back on November 20th, 1, 2, 3, 4, 5. 5 green closes in a row. We end the month down 0.48%, which is a red month, but we're only down 0.48%. That's it. 12 green days of the month, 7 red days of the month, and we still end the month red on the month. Now, on the spreads, November 15th, we had 15 wins, 3 losses. Your 3 losses were the $4 failure, the $3 failure, the $4 failure. I'm away, right? I'm away. But what you wind up there with is 15 wins, 3 losses. Pretty damn good. 4,325 with 400 in losses, and that's per contract. So everything again worked out great. QQQ, your big green week, and this big notification here that you're back to plus 20% year to date, having broken above, I forget what the number is, but it's like 619.01 or something like that is the break. Might be 618.30. But yeah, back up above 20% after having been below minus 20% all this time. And here you are with 1, 2, 3, 4, 5 green closes in a row. So once again, a red close due up initially soon. These need to be moved over to the right. Should obviously be expected. Now, over on the Russell 2000, green month, up 1%. You open the month over here at 246. Close the month at 248.75. That's a green month. That is 1, 2, 3, 4, 5, 6, 7 consecutive green months in a row on the Russell 2000. And we'll get to that as we get covering on it. But yeah, once again, last week, as I shared, with the blind view of it, we're going up. We're going up during the course of this week. There's no question we're going up. Your up wound up finishing for you. Where are we? On the spreads. Your November monthly candle, as we knew, would be a red month. Full credit. Blindly expecting a green week ending Friday, November 28th. 66.41.36 is your weekly candle. You got your green week. And so what I've shared with you now going into the end of the week on Friday was trades that we can now be taking moving ahead into looking at the FOMC meeting on December the 10th and December 17th being the OPEX week. However, Why we're doing this is both, number one, where are we? The full moon is happening here on December the 5th. So that's our full moon. The window of the full moon, as you go back and track specific pivots, highs and lows on full moons, are usually +3 trading sessions or -3 trading sessions from the full moon. As we come here again to what we have been tracking being the October 2025 top, these dates of when these pivots have been taking place on the Fibonacci spiral have been very accurate, very accurate. And your next one is coming here on December the 2. December the 2, we're looking for it to be a high. So December 2 being Tuesday, and then December 5 being your window for your full moon. So somewhere in the very early stages of this month, we should be looking for a top to have been placed. And then your next pivot is December 23, looking for a low, which once again, it fits. It fits very, very nicely into the projection of what we're looking for as we go into the month of December. So from here, I think that I have covered pretty much everything other than, next weekend, I will be getting a very small typhoon as of now.
Not this time. Not this fucking time. No! No, 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 no! No! No, 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 no! No! Not this fucking time! No fucking way, no fucking way! No fucking way, no fucking way! You made me look a right cunt!
As of now, these aren't 150, 160 kilometer an hour winds, 230 like the last one. They're not. And as we're turning gray here is because, we're talking about a week plus forecast. All of that can change. But we are going to be getting hit with a typhoon as we get into the latter part of the week. So as the beginning of the weekend starts, I'll give you an update as to whether or not I can get any one-on-one calls done during the course of the week. The ones of you who did one-on-one calls with me during Thanksgiving, greatly appreciated, enjoyed myself, and enjoyed everything else about it. However, before we move on to that, again, 5 green closes in a row over here on the SPX. So 68.4909 being, as you'll see on the chart, pretty damn perfect. The idea that I have moving into the beginning of the week would be for Monday, doing the 68.55, 68.50 call credit spread and getting at least 250 credit. Minimum 250 credit. Now, I think it would be a little bit risky taking on the 68.30, 68.25 for Monday. But if I did this, I would be looking at $4 credit. And I'll show you why. Now, looking later into the week, December 5, taking a 68.30, 68.25, getting at least 350 credit, not a bad deal. Not a bad deal whatsoever. However, if you're going to move out there and go out to December 10th, when the FOMC meeting is, and you're looking at that 67.65, 67.75, 60.77, what the fuck is wrong with you? Say the fucking number right. 67.70 call credit spread, $4 readily available. Many of you got it on Friday. 3.75, the bare minimum. Some of you got it on Friday. So that's what I would be looking at as you move into the earlier portion of the month, with December 10th being the FOMC meeting. So, like I said, I think that we got it all. If you're not following me on Twitter, go ahead and do that. On X, My Options Club. If you're not following us on YouTube, go ahead and do that. My Options Club. So, where are we and what do I need to get into now? So, that one I will do later. First of all, I want to get on to our charts. And here we are with the SPX. The gap from November the 12th, perfectly filled. Perfectly. I'll leave it there just so you can see it. Here's your 20-day, so you're looking at the entire month of November, with this right here being November 3. There's October 31. You've got a tiny little gap right up above, but your gap over here from your second opportunity to be short for the month of November, as we were up here November 12th, perfectly filled. So that is gone. Now, during the course of this past 5 days, with the low having been placed over there on the Friday, 1, 2, 3 gaps to be filled, with the lowest one coming here to around 68.11. That would be the only one I would concentrate on. That would be the only one I would be concentrating on, understanding this is highly likely, because what you get when you get these massive rallies to the upside is your 5-day moving average, which, as you can see here, we put it to no. We have gapped up above the 5-day moving average since Monday, all last week. Gapped up above it, stayed up above it, stayed well above it on Wednesday, and then you had your trading session there on Friday where, again, you're well up above it. So your 5-day moving average is going to be your primary downside view. That's what you're looking for. The 5-day moving average, that being your limitation for where your dip is due to take place. Now, from the, again, bigger, broader, wider view of all of it, let me see if I can get it here. Yeah, it's, you know, for you guys, it's a little bit funky. It's a little bit dirty as we had this big extended wave 3. But what you are supposed to expect is that you had your wave 3. This was your wave 4. And now we are going into wave 5 up into the 7200s. That is what we are all supposed to expect. I differ. I don't expect it. I'm prepared for us to be in a resistance area for everything above 68.25. However, it's going to take the time frame of getting into the new year, very much like last year, where we should not be breaking down and selling off down here like we did in 2018 until we get to the new year, the new tax year, only because of this big, massive rally that we had since April. So, again, from the view of where we are with that big drop being the A wave, which we'll call it, let me go ahead and, come on, man. Duplicate this being the A wave, and I'll zoom out for you. This being your A wave to the downside. 1, 2, 3, boom, A wave. Perfect. Now your B wave. You've got your, let's go in here, 10 days, 5 minutes. You've got your A wave, your B wave, your 1, 2, 3, 4. You're looking at your 5. Somewhere here between 68.52, which was almost perfect, and 68.73, where there is a tiny, tiny gap just up above. Tiny gap right up here, 68.90. Tiny little gap. So filling that gap, not out of the question, not at all. So you've got your 68.73, your 68.52 for your, hey guys, you've rallied enough, okay? It's time to get a dip. So where this dip comes down to is what we're telling for. We break down below the 68.10, we know that we have a chance for getting a C wave. We break down below 67.80, 67.35, we know that we have a chance for this actually being a C wave. And when we want to zoom out a little bit to see what we're talking about the possibility of having this be the perfect drop down to, take that off, take this on, 64.50 would be a perfect move down to 64.50. What it would also do is it would have you into an extremely bullish setup moving into the new year, so that as well needs to be considered. But as of now, all that we're looking for and all that we're expecting is to be able to see a dip somewhere down here into the low 6700s. That's it. 67.35, 67.50, down into that area is all that we're expecting to get. Come over here once again on your bigger, broader, wider view of where we're at, looking here at the ES chart. And again, going back here to the 2018 highs, over here to the 2022 highs, over here to where we're breaking above, seeing how this channel is just so perfectly being played and worked out. Come on to your daily, and you can see here we are up above that upper channel line. We're still up above the upper channel line. Come into a wider view, or I'm sorry, a zoomed in view. Coming off of that August low where we had the July 31 to the August 1 sell-off, incredible 3% one-day sell-off, we came right down to the FOMC lows on our low over here in November. That's it. Right on down to the FOMC lows. Pink, pink, 123.6 extension, and here we are with our bounce to the upside, which, without having it, let's go see what we've got. Extend to the right. And you're right there. You're right on in there. So again, with that just being a more or less visual look, which is pretty damn accurate actually. You can see here how we came right up to it and resisted, had our little dip there on Friday, and then right there towards the end of the day there on Friday, this being Wednesday? Yeah, Wednesday. Over here on Friday, we had our poof, little bit of a blow off. So this coming back and retesting this trend line, that's your first test. Your second test is the 5-day moving average, which will be moving up. So we've got a few tests that are going to be coming in the early part of the week before we start going and saying, oh, without a doubt, we're definitely heading down. We're heading down there to the low 6700s. We got a couple of tests that are going to be coming up first. But come over onto your QQQ, and again, FOMC lows, the November lows. I mean, there's nothing that really took place other than a nice dip to be played. But we're heading into the end of the year, and you don't have the new tax season starting until you get into 2026. So looking for this to be dropping down below 575, 580, not this year. Next year, totally different game, but not right now. Well, go back to the QQQ. Over here on the QQQ, the upside where we have with our gaps is, no, we don't need that. We can go with the 30-day. You've got your gap here, which we've entered, which goes to that 621. And then you have your bigger gap, which is up here, 627, 632. I wouldn't hold my breath on getting that bigger gap, but I would be looking for this gap to be filled at 621. So there's still plenty of time to be looking into positions as we start looking forward into the middle ending portion of this week, the FOMC meeting, the December OPEX, and whether or not the Fibonacci time spiral is going to continue to stay accurate, where we're looking for a top early part of this week, and then we're looking for a new low somewhere during the days of Christmas. Day before, 2 days before, day after, very much like what happened there in 2018. Now, this is where, again, it gets very interesting. Where we came down to over here on Friday was right down to that 1622. Right to it. There's a tiny little gap down there. But again, this was our warning when we had our move over here in October off the FOMC meeting up to that 2884. Now we had our sell-off, which took their place there in November. We never broke 2884. And what does the VIX do? The VIX always goes back to 2102. And after we got back to that 2102, then you started failing on your other, come on, bears, are you alive? You know, what's going on? And we're down here at 1622. So again, looking here at DIA, I didn't notch the new gaps that need to be filled yet over on DIA, but once again, you're 1, 2, you're 3, 4, and now what you're blindly supposed to expect is that you get your wave 5 to the upside, which the wave 5 would take you to DIA 500 plus. Here's where it gets interesting, and this is what I'll finish you off with, is the Russell 2000. Son of a bitch, man. Son of a bitch. The great trade over there on the Russell 2000 during the course of the month. I mean, fantastic. We got that breakdown down below 231, dipped into the below 230s for a fraction of a couple of hours, but then this blow off that came out off of this bottom here last week. IWM. You've got 7 green months in a row. 7. So what does that look like? Well, here's your Russell 2000 futures looking at the 4-hour. You're just coming up on that 25.1850 resistance line, just coming up on it, and there is an enormous sell divergence. But that's again because you got the holiday. Not a lot of trading going on. You got a big sell divergence here on the 4-hour. Now, come on to the Russell 2000. Again, 4-hour, just to be able to show it, but 4-hour, looking at your RSI, and you are up here into the, okay, I've eaten way too much food. Where's the toilet? That's what you've got going on over here on the Russell 2000 on the IWM, looking at your 4-hour chart. And again, you're up above that 244. So, Bernie, as you asked, when is a good time to be getting IWM puts? The answer is now. Now is a good time to be getting the IWM puts. I would stay up in this 244, 245 region only because what we had gotten brainwashed into for a considerably long period of time is that IWM does not break down below 240.
This executive order is for allowing people who are complaining about your tariffs to be permanently labeled as whiny, retarded, sad little bitches.
Hold it. This is a good one. Is everybody listening?
All through September, October, we did not come down below 240. We dipped intraday, but we didn't close below 240 all but those 2 times. And we've come down to those same lows as we dipped down here, down to 229 one day, last week Thursday. So yeah, that's what I would be looking at when we go into that. And again, going back into it, no, I don't need the VIX. I need the Russell 2000. Big, broad, wide view looking here at the IWM, looking at the daily. The daily is still very bullish after coming off of very oversold, which is how you get your bounce. But here you are. You're up above that 245.85. You've had 5 green closes in a row. You close over here at 248.75. It would be excellent to do a bearish call credit spread, but at the same time playing puts because that's what the IWM is a little bit more famous for. I would be looking at the 246 puts. In fact, we go look what the 246 puts closed at. And let me see here on my other screen. 246 puts. Jesus Christ, they closed at 32 cents. So yeah, you want to be looking at the 236 puts for any day of the week next week. And again, here, bigger, broader, wider view, looking at it from a monthly point of view. You had 7 green months back here in 2013. You had 6 green months coming over here off the bottom of 2016. 8 on the Trump pump, back over here off of COVID. COVID low, bang, the big pump. going into June 2021. We had 6 coming off of the 2022 lows, and here we are now with 7 green months in a row. So it's a slow trade. You know, it's not a trade where, you know, you're doing 3, 4, 5 trades in a row in the course of a day, but that's what you've got right there. You're up above this 2482 on the Russell 2000. It's screaming and hollering to you, hey man, come on. You gotta get short. So yeah, that's what you're looking at, is the short, but not the drop. Now, I wouldn't be looking for the Russell to be dropping down below 240. In fact, I would hesitate about even thinking of the Russell dropping below 242. So you've got a little bit of limitation there on your IWM, but that's what you're looking at as you move forward. So on the other charts, again, because I was out of town and we got back after a 15-hour drive, haven't really looked into too much, but okay, Amazon filled that gap, so that's good. Apple, way the hell up here. Jeez, Google, I've got a couple of things to talk about with Google. Your big bounce over here on the Meta, Nvidia is still heading to the downside. Everything still looks clean. It all looks good. So be careful about being too bullish and overexposing yourself, thinking, you know, here we go, we're heading to the upside. I would be looking at, because the futures are flat, dead flat, even though Venezuela is due to get invaded. They're dead flat. Keep it tight, keep it short, keep it light. Bigger, broader picture, you've got the FOMC on December 10th. You know, we're looking at there being a top to come in over here over the next couple of days. Where are you? Boom. We're looking at a top to be happening over these next couple of days. December 2 is when our Fibonacci spiral date is. December 5 is when our full moon is. So tiny little window there in between where we should be looking at a top to come in this week. And again, going back to the charts, again, going back to the charts, nope, not the VIX, but over here on the SPX, tiny little gap. I see almost no reason why they wouldn't go fill it, 68.90. And then you've got your gaps from over Thanksgiving week. You got your gap over here to 68.12, your gap over here to 67.65, and then your bigger gap that you had back during the beginning of the week down here below 6,600. I would not concentrate on this. I would only be focused on these two gaps right here. So nothing lower than, call it 67.70. 67.70, 67.65. So I hope you guys enjoyed your weekend, and I hope, once again, none of you were Alex Jones at Thanksgiving.
They look up to some twit instead of looking up to Thomas Jefferson or looking up to Nikola Tesla or looking up to Magellan. I mean, kids, Magellan's a lot cooler than Justin Bieber. He circumnavigated with one ship the entire planet. He was killed by wild natives before they got back to Portugal. And when they got back, there was only like 11 people alive of the 200 and something crew, and the entire ship was rotting down to the waterline. That's destiny. That's will. That's striving. That's being a trailblazer and explorer. Going into space. Mathematics. Quantum mechanics. The secrets of the universe. It's all there. Life is fiery with its beauty. It's